Good evening, everyone. Good evening, everyone. I know it's been a while since I've hosted a stream on YouTube. Been a pretty busy few months in terms of after hours and things like that. Just finished up a mentorship with the 2023 class. You guys can actually check out all the testimonials that they've written so far in the testimonials channel. But I have some more time to do these things again. So expect some more videos and live streams to come. Now, in terms of today, we are actually going to be covering quite a number of things. One of them is going to just be a broad overview of what happened in the past week, a little recap of what we provided, the analysis that I provided, the trades, things like that. We'll do a brief recap of that. And then take a look at a few opportunities that I've been eyeing for the upcoming weeks and look at a few tickers that I've already scanned and charted. So it'd be a nice and chill Sunday night for you guys. If you guys do like my content, I do appreciate it. If you guys like the video, share it, subscribe to my channel, and feel free to join us as well. All right. Let's actually start with SPX this week. The weekly plan that I gave you guys last weekend, I had already expected pullbacks to come from the recent rally. Now, when I say pullbacks, I don't mean a crash. Okay. I had repeated over and over again the entire week that my main targets will be 45.27.76 and 45.18.43 on SPX. I had also provided you guys with a few different paths that I expected to see on SPX, and I pretty much graded them by importance and probability of happening. Okay, so if we take a look at SPX 500 USD, I had these squiggles drawn out for projections in terms of the paths, right? And if you guys remember, I mentioned that the green path and the yellow path would be the most favorable for continuation into higher targets, which would also lead to a break of the previous high back in July. And my expectation, mostly being the most probable scenario, would be the green path playing out. And so far we have. The only thing that was different about the projection that I had was that we didn't get the full pullback into the lower levels that I expected, which is basically 45.27, 45.18. And that was pretty much what I was looking for this entire week. Now, range trading can be a difficult thing for most traders or some traders. I don't know the statistics behind that, but for me, I thrive in range trading. There are many times where SPX trades within a specific range for weeks at a time, sometimes even months at a time. And personally, I love trading the ranges. As long as you find your pivots, as long as you understand where your major key levels are, it's very easy to execute. Okay. So far into the close of last week or this week, we have now broken back above. This is now playing out. Notice the timing of my squigglies as well. These are not just randomly drawn squigglies on the chart. Notice the timing of what I expected from here when I initially drew it and the structuring out that I expected before another break. And timing wise, it pretty much played out exactly as I projected with the squiggly. So now we're looking to see higher. Definitely want to see how it reacts here. But going back to SPX, I essentially provided you guys with two major pivots to watch out for the entire week. Okay. One of them was 45.66.91. The other was 45.45.85. These were the two key levels that I told you guys to watch this entire week. And those will determine directional moves. Now, these levels have been on here for God knows how long, probably over a year or so. And we've been utilizing these levels this entire week. Okay. I had also provided in my daily thoughts that the 4559 into 4555 range, which is basically this range here, will be used as the intra-range pivot. Okay, and this is how we execute day trades on a daily basis. We utilize these pivots, and if we're trading above these, we can long it into 45.66. We trade below this, we can short it into 45.45. It's very simple, guys. Very simple. Now, as you can see, every attempt to break the 45.66 throughout the entire week resulted in heavy rejections, right? So we capitalized on a lot of short opportunities on SPX. The 28th, what was that, Wednesday? Tuesday. Yep. This is the day that we shorted SPX for 800% on 45.50 puts. And again, mind you, it was only like a 15-point move that we caught. And I even gave you guys an analysis from a very different angle by looking at implied volatility. IV has been so low on SPX, which is trading at 10 to 13%, that if you catch a move, a large directional move intraday, you can capitalize on multiple bags on SPX 0DT. And that's exactly what I was focused on this entire week. So on this day, we were able to catch 800% on that. Now, going into Thursday and Friday, a 15-point move did not provide 800% anymore. Why? Because we were trading at 20% IV again. So when I told you guys during the week that this was the most advantageous time to print on SPX for 0DT, I wasn't lying. If you get directional moves on low IV, that IV will pop from that move as well. You will inevitably profit even higher from such a small 15-point move. All right. So same thing happened on on Wednesday. Off data, we peekabooed above, rejected, came right back down into the range, etc., etc. We finally broke 45.45 on Thursday. Didn't last long. We hit our 45.37 level before bouncing. Okay, and then all the way into the end of the week, we broke out. And I had mentioned in the daily thoughts, if we do break this 45.66, we are going to revisit checkmate, which is this level. If you guys remember, checkmate is the level that I shorted right before the BOJ news came out a few months ago. And that marked the top. That was when I told you guys the top was in. It was also right when I told you guys that the market was euphoric. Same time was when the Apple news came out. Okay. So there's the reason why I have this level, this 45.98 level marked as checkmate. Okay. So we're now revisiting this area. We rejected it on Friday. Now we need to see what happens, this coming week. Cool. That's with SPX. All right. Now, in terms of this week's watch list, let's actually recap some things that I've shared with you guys over the course of the last couple of months or so. I have provided you guys with so many names on the markets, and my bull thesis in my weekly watches came the day I said Santa Claus is coming. That was what, 3-4 weeks ago? And we pretty much capitalized on almost the entire rally. Okay. That has not changed. I told you guys previously that there are so many good setups on individual names. You cannot possibly be bearish on the indices if you're seeing so many individual names with 8+ setups. For example, coin. I gave coin to you guys very early. I actually started talking about coin back in October, saying that this is likely going to see 90 soon. Right here. October 9th. Okay, coin to 90 soon. We have now rallied into 133. I added this to the watch list for you guys, a couple of weeks ago, I think, for a weekly watch list. We took 120 calls. We took profit, I think, right around 119 or so, or 118. And it's continued to run into 130s. I do expect further, likely into 150, possibly even into 200. But main thing I want to focus on is this range here. Okay. So when I add something like coin to the weekly watch list that you guys can trade on, that also means I'm bullish on Riot and Mara and MSTR and any crypto related names. This week, I've added Mara. Reason why is because I do think that miners such as Mara and Riot have actually more room than coin. I do think that they're lagging a bit behind coin. Even MSTR, for example. MSTR is looking like it wants another leg out of this range. So lots of opportunities still with the crypto stocks. But just to give you guys a few examples of this. All right. Now, another name that I've been sharing with you guys since October is gold. Okay. You guys remember this? I had mentioned to you guys back on October 8th that there is a potential island gap reversal coming on gold. And that was right in this area here. Okay. We were trading at 169 at the time. And I kept you guys updated with the fact that gold is likely going to go to new all-time highs. Okay. We are now trading at 192. And the swing that we were looking at the entire time was 200 calls for January, still on watch. I think there's plenty of room on this. All right. Throughout the entire past month, I have been providing you guys a bull thesis from multiple angles. From VIX, taking a look at BTC. If BTC is popping off and BTC is rallying, there is no reason to be bearish on equities. Okay. If you take a look at VIX, I told you guys, if VIX is trading under 16, actually, let me go back to, here we go. If VIX is trading under 16, it would not be a wise decision to be short on equities. Okay. We are now trading back at 12. And the market has been sending ever since it broke 16 again. All right. So these are key things that you guys have to pay attention to when I'm sharing these types of analysis within the group. Look at BTC almost at 40K again. Okay. This is a very risk-on environment. This is what you guys need to understand. VIX is trading under 16. BTC is almost back to 40K. This is very risk-on. So there's no reason to be expecting a crash in equities. No reason to be expecting a 10 to 20% pullback in equities, right? SPX has popped what? 400 points off the low, almost 500 points now. Okay. You don't just try to fade every move thinking that a crash is going to come. You're going to become insolvent that way. All right. What is it saying? The market can stay wrong or right longer than you can stay solvent or something like that. It's true. Okay. Some of these things you just don't want to short. You don't want to stand in front of this train. And this is one of those cases. Now, going into some other individual names that I'm watching this week. So this watch list for this week includes Fiverr. I am really liking Fiverr at the moment. Let me just delete some of these drawings here. Really liking Fiverr at the moment. One of the reasons why I looked at this is one of the members had mentioned Upwork. Upwork and Fiverr are both in the same industry. Upwork looked great, so maybe you want to take a look at Fiverr. But Upwork is another name that, I mean, this is a beautiful inverted head and shoulders. 1491 is a key area to break. You got a bull flag for me here. Contraction and an expansion. All right. So when you're taking a look at Fiverr, very similar. But I do think that Fiverr can probably provide higher RR and profitability than Upwork. This is kind of reminding me of the ZS low that I gave you guys. What was it, back in May or March or something like that? We already got the break of the falling wedge. We're now reclaiming this demand zone here. Okay, so as long as we hold above this yellow box, I would like to see this projection play out, essentially. Okay, break above 2904, which is going to be a key level, heavy resistance there. If we can hold that, structure out a bit, do a bullish retest, then we can send into 35. 35 is going to be my major target for the next probably 3 to 4 months. Okay. Another one that I wanted to look at is a lot of names that I've been going through. Oh, actually, going back to, I didn't finish up the gold. So being that gold, we've been bullish on it since October. You can even see the same thing in XME. XME is the ETF for miners and metals. It looks great. It looks fantastic. Okay. May need some structuring out here, especially right within this supply zone here. Some ranging and structuring out. And then send it to new highs. Okay. Now, on that note, you can also take a look at SLV. SLV, same thing. Looks beautiful. We just got a breakout of this bull flag right here. Okay. And then we can actually just draw a couple more trend lines just to give you guys an idea. All right. So now we've broken out two major resistance areas. Targets can probably be 2463 again. This was a huge range that we traded in back during COVID. Okay. So gold SLV, I think gold is probably seeing 200 plus. That's been my target ever since I gave it to you guys in October. So definitely keep an eye out on this as well. Now, next thing I want to take a look at, went through Mara, Riot, Zoom. Love Zoom. I think I love how it looks right now. They had a phenomenal ER. Lots of accumulation, it looks like down here. Bottoming cycle. Monthly inside candles have been holding. October lows held twice. You got a little stop hunt right here off these lows. Right off this October 2019 monthly inside. Now it reclaimed the monthly inside low of November as well. Okay, if you guys remember my monthly inside stream from before, you guys will understand what I'm talking about. Okay, so higher target is going to be 78, 89. 89 is probably going to be a target that may come within the next 6 months or so. But I really do like the RR on this. And as long as we hold the 69.54, it's going to provide some good opportunities to breach back into the 80s. Let's see, what else was I looking at? Play. Dave and Buster's. Play is a name that I've been watching for quite some time. We have been ranging in this 30 to 50 range for 3 years now. Okay. I am expecting a breakout of this range. It's a slow mover. So honestly, even just buying spot positions, buying shares might be better than trying to time an options play or leaps, right? They can work as well. But I definitely do expect this to break out and provide a nice move, even probably retest the previous all-time high. Okay. Lots of strength here. Every time we dipped into this demand zone right here, it got bought up every single time. All right. So need to hold this breakout, this macro breakout, and then you can expect a larger move that I've basically placed here. EWZ. EWZ. You guys know I'm a big fan of trading EWZ. So this is another thing that I'm watching on the side. I've actually been watching it since this 32, never pulled the trigger on anything yet. And we are now retesting this top trendline resistance here for a potential breakout back into 36. Not much really stopping this, honestly. From where we're trading at right now, there really isn't much stopping this into the 36 level. Okay. 36.77 is going to be a major resistance area, so need to see how it reacts there. But even from here, let it structure out a bit. Looks like we have a potential breakout that came this week. Lots of volume, high volume within this range. And we can likely see this 35 to 36 probably within the next couple months, if not sooner. WM. Waste management. All right, waste management. This is also another name that I put on your watch, on your radar a few months ago. And timing wasn't exactly correct. We watched it sometime around this area in July, within this range. I do believe we took swings on it and then we took profit. And then we got the pullback all the way down into the bottom of the range again before bouncing. Okay. It's now reclaimed the entire move. Just broke out of this wave right here. Just broke out of the wave right here. And now we're on our way to retest 175.98 again, which is all-time high. All right. So I really do like this as well. This is also on my watch list. Going to be looking to take these into 193, 185, possibly a break of 200. All right. This has been ranging ever since 2021. Okay. So it's about that time for this to provide a nice move. Now, another one, BABA. Actually, let's talk about PDD first before we get into BABA. You guys may remember that I've provided PDD to you guys all the way in the 70s down here where I had these circled. Okay. Unfortunately, TOS doesn't allow trading a PDD. High risk, I guess. I don't understand it. But That's mainly the reason why I never took the trades on it. But since then, this has now seen 100% move on underlying since the summer. And I even provided you guys in a previous video of a potential bull case on PDD that has to do with Temu. If you guys are familiar with Temu, it's like pretty much like Alibaba, but accessible to everyone. And it's been blowing up on TikTok for the past few months. They're actually owned by PDD. All right. They had a phenomenal ER. I mean, look at this. 120, 118 to 145 post ER. Ridiculous gap up. We completely broke the structure here, and we just rallied right into the upside. All right. Now, BABA, different story. I'm going to be honest. I'm not really a fan of trading BABA. This is why I rarely ever trade BABA. The only times I ever add BABA to the watch list is if I'm confident that the R is good for a reversal. Otherwise, imagine being an investor in BABA and holding shares for the past 2 years. Absolutely nothing. Nothing is happening. All right. Meanwhile, everything else in the market is running to new all-time highs. However, I do like BABA here. As long as it holds this low, the 73.28, I do think that this can probably provide nice R for reversal. Heavy volume here, but the problem is that they're all anomalies, right? None of the volume is matching up with spreads of the candles. So I really do like this. Friday's close is phenomenal. Volume breakout again on Friday. Even the premium charts look great. So if I'm expecting a move, I'm probably expecting 75 to come within the next week or so, and likely a test of 77, 78 near mid-December, like the 15th or something like that. That's what I'm projecting for BABA. So I do like this for RR, although for me, I'm always more focused on short term for BABA, not long term, because this is a terrible stock to trade. Okay. I have provided you guys bottoms on BABA multiple times this year. I think this was the last time I provided the bottom back in May, when I told you guys China stocks should be able to run. Since May, we saw a move from 78 to over 100 again. And now we've pretty much retraced the entire move and saw new lows on the year. Okay. What else is there? What else is there? Bank of America. Do you like Bank of America? The last time I talked about Bank of America was here. Potential to be here. Bullish divergence right off these lows. Okay. And then a breakout. Got the breakout, got the retest, bullish retest. We flipped again. And now we are about to test the top of this macro falling wedge. So once we get out of this, you're probably going to see a retest of 33 plus, 34 plus. Okay. Going on to that, if we take a look at the strength of Qs versus Dow, you can actually start seeing this playing out. This bear flag is playing out. Strength is kind of waning on tech, and money should start rotating into the Dow. If you actually take a look at Dow Jones, you kind of already saw it on Friday and Thursday. Okay, so when we're taking a look at something like comparing QQQ and DIA, you'll see the correlation here. All right, same thing with VUG over VTB. When we're looking at growth over value, broke out of this wedge, we're about to retest and potentially break within it again. Okay, so things like banks, travel, they have not hit all-time highs. They're not even anywhere close, to be honest. And I do think that money is going to start rotating back into these names. JPM getting pretty close. Bank of America very far. GS just broke out. All right. So a lot of these banks look great. I mean, even BA. BA looks great. Our initial projected move when we discussed BA back then was this entirety of the move to play out similarly to how it did based on this projection back in 2020. However, we didn't get that. So far, we are now breaking right back into this supply zone. And if we structure out a bit here and hold this, break out, something like this. Okay, that's what I like to see. All right. But you can't ignore the strength. I mean, BA dumped to 176, and now it's right back to 233 within a matter of a month. All right. What else is there? Targets. Target. All right. Target. You guys know I've been watching Target ever since the whole go woke, go broke started happening. I was pretty bearish on Target, and then I told you guys that you can probably just buy shares anything under 130. 130 to 100, it's good for long term. We also watched Target for ER trades. Unfortunately, I didn't take it. I know a couple of you guys did. Amazing. I think you guys saw about 8 to 10 bags the next day. Great swing for an ER lotto. I expect higher for Target as long as this structure here holds. Okay. As long as this structure here holds, does a retest, structures out a bit, we can break back into this supply zone as well. All right. Target's not going anywhere, by the way, guys. So the whole shorting on Target that was going on for the past few months, you know, most of it is really just based on the go woke, go broke kind of thing, right? But in reality, you know, Target's not going anywhere. Like this is a huge retail store. They're not going off the map. So it's a good time to start looking to buy the dip. All right. Now, what else is there? Airbnb. Airbnb is another one of my favorite ones. Airbnb, these key levels that I provided here, 113.80, which is a previous weekly inside breakout that dates back to, I think, October of last year. And this gap fill level, this 124.28, which dates back to also September of last year. These have been key levels that we've been utilizing on Airbnb this entire year. Every time I talk about Airbnb, it's always right at these levels here. Okay. We retraced the entire move, held 113.80 again. Some accumulation happening right here. You can also see the volume, increase in volume here. Then we broke out, structure out again. 129.71 provided some resistance. Broke out of another bull flag here, and now we had a huge daily candle on Friday. All right, massive move, almost 10 points. So I expect higher for Airbnb as well. We are also now invalidating this bear flag. We just reclaimed it. So another name that I like to watch. I do think that Airbnb can probably see new all-time highs sometime next year. I'm pretty bullish on Airbnb in general, just as a business. So I do like the chart. What else is there? What is my analysis on W? Wayfair. I do like Wayfair a lot. The last time I gave you guys Wayfair was probably right around here at these lows. Had a massive move into the summer, retraced the entire move, printing a higher low on a macro time frame, held my levels here at 39.19, and this can likely see another breakout of this cycle probably soon, honestly. I'm gonna have some larger resistances right around this area here, but once we get past this, you can probably retest 100 again. Dow, I kind of already went over. Oh, this is different Dow. This doesn't look bad. I like it. Potential retest of this macro trendline resistance here. Doesn't look ready just yet, but doesn't look bad as long as this 52 area holds. 52 and 51. Lily needs some time to structure out. I know I was recently bullish on Lily and NVO as well. I do think that they need some more time to structure out. A lot of these moves are currently based on news and obesity drugs and things like that. I do think they're going to pop again, but they need some time to structure out. As of right now, I don't like this curling structure. And if we actually break this here, you can likely see lower again. Corsair. Corsair actually looks pretty good. Yep, I like Corsair. The last time we talked about this was back here when I provided you guys this move. Wow, I didn't realize this whole thing retraced. It looks good. This is actually very bullish. Right here. This is very bullish. You can probably retest 14. Lots of volume coming in too around this area. I do like Corsair. Dow. Yeah, like I said, I mean anything with Dow Jones I like, and you should be able to see the rotation from tech going into these names over the course of the next few months. Here we're starting to see a retest of this zone here. By the way, in terms of airlines, Dow is my favorite to play. Every time I play airlines, it's always Delta Airlines. I might be biased because I personally love Delta Airlines. I fly them all the time. But in terms of the actual movement, Delta Airlines is my favorite. UAL comes second place to that. Most of the other airlines I don't really care to touch, but Dow and UAL usually provide the best moves on option trades in my experience. But yeah, huge zone here that we need to test and see how this structures out. But I do like it a lot. Likely going to see the same thing on UAL. Needs to break out of this range. We haven't actually flipped bullish on this yet compared to Dow. So UAL may be a laggard behind Delta, but once we break out of this range, you can expect something like that. Still a lot of resistance to get through on UAL though. A lot of resistance. Cool. So that's pretty much it. I think that's all I wanted to cover this week. AMC Gold, EWZ, WM, BAC. Yep. I think that's pretty much all I wanted to cover for this week. All right. Any other questions? Pretty chill stream, right? It's been a while since I've done this. Match? Pretty sure match is dead. Yeah, I mean, probably bullish divergence down here. Nope. Match does not really look that great. I'm not really too bullish on Match.com, honestly. Not just from a chart perspective, but I mean, look at all the volume in the selling. I mean, this is pretty heavy volume. It's just, I mean, what is the demographics for using Match.com nowadays? You know, if you want to take a look at Match, I mean, you can even take a look at Bumble. None of these dating apps are doing well, right? And I think a lot of it, you can kind of have a case for the fact that, for example, the dating apps popped during COVID for pretty obvious reasons, right? If you just think and observe about the real world around you, it's pretty obvious. You were locked down. You couldn't go out. How are you going to meet people, right? You're not going to go to a bar and meet someone because the bar is closed. So a lot of this rally and movement and all the buying for dating apps happened during COVID due to that fact. And now we don't have lockdowns, right? We're not in a pandemic. People are going out more. People are meeting people. So I'm personally not really too bullish on dating apps, especially not Match.com. If I would be bullish on anything, it would be Bumble over Match.com. Amazon. Amazon may retest this range, but like I said, I do think that tech is a little topped out at the moment compared to other names that have better setups. Small caps should be able to run starting this month, and we should be able to see the January effect. If you guys actually notice the weekly watch list I provided, you'll notice none of it is really tech aside from Baba. We have Fiverr, Mara, Zoom, and Baba on the list. And most of the ones that I liked are not even tech related. EWZ, Waste Management, WM, Bank of America, Airbnb, Gold, Target. None of these are tech related. And there's a reason why. Okay. So like I said, pay attention to things when I share an analysis such as comparing QQQ to DIA. All right. There's a reason why I just shared this to you guys. Okay. Money should be flowing back into value stocks and Dow Jones out of tech, just based on what I'm seeing with the correlation of QQQ and DIA. And also VUG, VTV. All right. VUG is growth. VTV is value. Okay. So Amazon, I do think that this should be able to pull back. I'm pretty much having the same sentiment in terms of all the large cap tech. Amazon, Nvidia, they need some time to structure out, and I do think that they need to pull back, and I think that money's gonna rotate into other stocks, small caps and value stocks for the time being. at least for the next couple months. Cool. Any other questions? Again, if you guys do enjoy my content, please subscribe, like, share. I love doing these things, so I hope it's valuable for you guys. Any other questions? Any other charts? If not, I will let you guys enjoy your Sunday early. Alrighty. Well, I appreciate you guys joining tonight. If anyone misses it or wants to rewatch it, it'll be on my YouTube video as soon as I end the stream. Just look under live. Oh, there's some more. Okay, let me go over these. GME. GME needs to structure out. I know anyone who caught this move printed, but right now it needs to structure out. If it reclaims this range here, starting to look good. But I don't think memes are going to run as much as people think they are. I want to be honest. I don't think GME is going to see like 40 or 50, in my opinion. You know, and every time we play GME, we usually catch a really nice reversal on it. But this time around, I just don't think that there's a huge meme cycle that's going to happen again. Bill Nye, the science guy. It's not the best looking chart, honestly. It doesn't look terrible. I think this can probably retest the gap at some point. You got a lot of resistance right around this area here. Oops. Got a lot of resistance right around this area here. And you also need to reclaim this range or this low. So far, it's providing resistance right now. Once it gets over, you can probably look at it again and reassess. And then look for a move into this. Moderna. This entire short move that I provided you guys back in the 120s played out perfectly all the way into my targets, actually, which is insane to see. Moderna looks pretty decent right now, actually. Huge volume breakout on Friday. Buyer stepped in, dips were bought. We need to break above this range. I mean, Moderna could definitely provide a nice move. I do like it. I just don't think the timing is right yet. But I do like it a lot. And this entire, I mean, you guys should be familiar with my cock and ball structure already, right? This entire thing, right? Same velocity of the move. Whenever it comes, should do the same thing. Right back into the 90s range. So, who knows? Maybe the new pneumonia going around, maybe some type of fundamental catalyst for it. I don't know. But in terms of the chart, I do think that it may need a little more time to structure out. But short term, this can probably see a move back to 85 within the next month or so. Yeah, this looks pretty good. Alrighty. Is that all? Cool. I will keep the stream short for you guys. Enjoy your Sunday night. Thank you guys for joining. And that's it. I'll see you guys on Monday.